Good morning. Today is Tuesday, June 28th, 2016. Pre-market is $1.79. Volumes approaching 3 million even before the market starts. Now, if you remember yesterday, I was following along on this. We saw the onset of this pattern here. I decided to not get involved and just let this thing pull back. I also said that a continuation to the downside here, although possible, didn't feel very likely. The level of upside here, if you compare MACD bottoms with price bottoms, this thing says that the price belongs somewhere in the 207 range. We saw also that the hourly chart flattened. And so this pattern, although not a choice pattern, it's a little too narrow for my taste on a 15, which means you have to bring in a 10-minute chart. And it doesn't have a lot of depth to it. I just didn't like it for a trading opportunity. However, if you follow the rules of engagement and you time this thing correctly here, I showed you how this actually made money. We were looking at the 200 calls, for instance. There's the quarterlies that expire on Thursday, and the entry would have been, the right entry would have been here at 324, and the price went from $1.22 to $1.75 for a 43% return in about a half hour. Right there. However, let me show you the 200 calls. Because, I did something interesting on this particular. Take a look at the price now at $1.68. Let me see the 200 calls. The July week ones. And I have this thing went out in 1 day so that we have. Maybe I did it on the 199s. No, I didn't. Okay, what I saw is this. See, if you are following along here, this is the time lapse, right? So here's your retest, and take a look at that 1 minute chart. That 1 minute chart on this drop at around 220 looks really good. The 1 minute down cycle is ending with an upside divergence, with a head and shoulders. We are near retesting. The 15 is already off. It's obvious that the 1 minute is going to bring the price up. That would have been an entry right there, 220 or thereabouts, right? There you go. So if you do that, take a look at what happens. This is 220. These options were 230, and this is that moment right here, 220 to 25, right? So the price rallies. The 5 minute turns off. But the 1 minute stops right there. There is a pullback and continuation, which caps its up cycle. So by 240 over here, okay, you are at 11.30%. But then, like I was showing you, that gets truncated and the price comes down, and it eclipses previously established lows by 3 o'clock or 2:55. Here we go. Right there, right? So you would be underwater on this trade at that particular point. The divergence, however, has not gone away. So if you were in this thing, then you have to then sustain the reversal. Take a look at how the 1 minute continues to build up on the upside pattern. We are still bottoming higher technically, yet the price is bottoming lower. So this is an upside divergence. The upside divergence on the 5 does not go away. And obviously you have the 15, and then I showed you how this is too narrow, bring in the 10, and it looks a little better. Then the price starts going from this bottoming there. And that could have been another entry. Right here, right? But at this point you are in the trade, you're underwater. The price goes slightly. It doesn't eclipse previously established stocks. The divergence doesn't go away. See how we have a lackluster move to the upside, 212, 229. At this particular point, you are in the brink of breaking even if you entered here at 220, right? Then the price gets slammed again. We take a look at the price bottomings and the indicator bottomings. The divergence continues. The divergence on the 5 continues. The divergence on the 15 or 10 continues. Nothing changes. You're still in the trade. And this is 325. I have it over here at 324. So entry here, cool. Entry here, cool. Entry here, perfect. Over here you would have made, like I said, 12%. Hardly under our type of trading a good trade. You just basically made commissions for the house. But then after this bottoming, the price does rally. And take a look at how that 1 minute gets capped. And that's 350, just a bit shy of the closing. And then this thing comes back down again in the last 15 minutes of ETF trading. So at this particular point, you would have been a little below from your entry at 230. See, it's 217 there. And now we know what happens because the market is up. Another pertinent observation is that I did this exercise here on the 199 calls, July week ones, and their returns are rather limited. I would have probably chosen the Q2s, the quarterlies, and I probably would have gone for the 199.50s probably. And this is not playing ball. But you know what? Forget this. The market is about to open. And I need to take a picture here. We are up at $1.90. Where we are. And I need to go here for the other picture. There's the upside. So $1.96, pushing $2, 6 million in volumes. And I can show you the 5-minute interval here. Here's the pre-market. There's the open. And take a look at that hourly. Now here's a look at the 60-minute time lapse. So there's the upside, eclipsing 201. So this is a pullback now at a 60-minute level against the daily direction. Let's take a look at the daily, totally poised. Now let's see how the daily advances. Take a look at the MACD from minus 87 technically to minus 123. Now, interestingly enough, the weekly chart shrinks from 113 to 127. Interesting. Now we are topping out over here. And what we can do is we can go back and take a look at the, say, 199.50. I want to see if we have, no, that's why, no, they do have 199.50 calls. No. All right, so that would force me either on the 199s, yeah, or I would probably go for the 200s, to be honest with you. They're a little too close for comfort. And so take a look at this. The 200 calls, this is that entry at 220. So 63.33% on opening from $1.50 at 2:20 p.m. Now take a look at this. 100%, 100.82% on opening from 122 at 324 right here. So there you have the two different trades possible. The blue circle over here corresponds to this one, and the red circle to the red circle here. Now take a look at how the price is now exploding to the upside. We are technically topping this 1 minute now. Extreme direction of the 5, extreme direction of the 15. We're definitely short on the 16 and long on the 15. Larger picture. About the XX. Take a look. You know what I see on the XX, if anything? On this drop in here, I see the makings of a very, very powerful upside pattern. If I call the 2 and 4, this thing is just going to make for a huge upside divergence in here. Interesting to see how this formed that pattern over here, and it's the same thing that we saw on SPY, but in reverse. No, not really. Upside pressure pattern. Upside pressure pattern in here. About our technicals in here, that monthly is calling the price down. We are on a downtrend. Now take a look at this. You always have to keep in mind channel regressions. So we hit the channel here on the drop, right? We need to bounce back. Now the bounce back over here going to channel regressions. If we establish the channel regression here, I mean, it wouldn't be crazy to say that the price can make it to 203, maybe even 204. I doubt it. You know, I want to say 203 something on the channel regression. And at that point, we're going to have an established topping system with negative pressure here on the 1 and the 5. So that's my 2 cents. The only other thought that I can lend to this scenario here is that we saw the entry very clearly here. And if that was the case and you still sustain the exploration of new lows, you have to stay in the trade and let it resolve. It finally resolved here. One of the reasons I didn't want to do that is because I considered this a little risky, because there was the possibility, technically speaking, of the price not moving this much back and continuing. However, one rule that I forget is the channel regressions. The channel regression here told me that bottoms on that channel have been met. So that gives you then the upside. So to conclude my thought in here, stay the course. And I have done so in past investments where I sustain being underwater for a while to let the thing resolve, like it is now. I'll take a look at this at 259 already, it's 112%. That is from this entry though. From this entry at about 50, it would be 72%. It's not too bad. So that's my 2 cents. Gotta let these things play out. And sometimes it's very difficult to get in on the very, very bottom or top, depending on what you're doing. In this case, bottom on an offside trade. Quick glance at the 15-minute interval here. Take a look at 15. It does advance higher, while the hourly shrinks a little bit on the tiny little bit of pullback there. The 5-minute advances, we have a technical top there on the 1-minute chart, and let's allow this thing to play out. Take a look at diamonds, and I'm looking at this thing from this context. I mean, it was a very nice retest. It's just that it was not a very choice, beautiful looking pattern. You have to go to the 10-minute chart and then take a look at what happens. Here's Rosa on the 10-minute. Now, I am thinking about this. Let's say that you are following along. That's nowhere an entry there on Russell. This, on the other hand, would have been an entry here. What I want to know is if we get the same on SPY. See over here, this thing is not ready. No, but this definitely gives you the in. The 5 minute, yeah. It's any which way you slice it. This is the entry. It would have been near impossible to stay and get this particular entry here at 324. So we passed the 10 o'clock interval, and this thing continues. Take a look at how this thing now made it to 283 for an 88% return from here. Hence the blue circle. Not interesting. Here's another note for you. You gotta pay attention to these patterns, especially when they happen within context. This should have been traded. One of the things that I'm also noticing is that I keep a lot of time here, and this is where I do my time lapse. But when you take a look at the context with the larger time frames, then a pattern like this makes sense. You gotta see it from here. This is the 60-minute time lapse, right? See, even the drop that I saw coming before even knowing that there was going to be a vote for Brexit, although I did know that, but I didn't correlate the two things together. That's correlating fundamentals with technical analysis. My technical analysis here should have been enough for me to say, I'm going to get in on this. And you know what? I'm going to buy the July week ones, or being aware of the quarterly twos, second quarter, buy the quarterlies, buy yourself a little bit more time, and the pattern over here was pretty good because we had a divergence here within a lot of weakness in here. See, this is overall a bigger divergence. And so it really pays to see the context all the time. The context would have given me the clear realization, yeah, this thing is going to pull the price back. So that gives you this ability. At the very least, something like this, right? And the other thing that I could have done is to trade this drop over here based on this context right here. Now, another thing that I want to show you, going to like a 2 time frame setup here. See, this is that moment, and I remember here on Thursday crafting this upside. You can hear me on video, there's got to be an upside. So overall, this thing was already a divergence, and over here even more so. But take a look at the 30 minute. The 30 minute was in divergence territory. So if you had doubts about the ability for this thing to drop the price, it's one of those, I'm still looking for the name of this type of pattern. I call it the one of two things pattern. The one thing is that the trend starts here, or you have yet another retest. But you enter your position here understanding, okay, if I go negative a little bit, I can sustain that. That's why you would buy more time, and you would get on the quarterlies too, the second quarterlies. And looking at this pattern, what would I go for? This is where bringing in the larger context space, I'm looking at the daily. Really, it's basically a daily negative divergence. How long was I saying there's going to be a price upside over here? We're going to make a killer negative daily divergence. It's just going to completely annihilate that weekly that had already turned. This was a pullback on trend, really. How many times have I said this is the beginning of the trend here? Divergences are nothing but pullbacks on trend. So looking at this thing here, the 208, really, that would be my choice. The 208 puts, quarterly twos, let's see those. Here they are. The entry would have been on that negative divergence on the 15 at the end of Thursday. As a matter of fact, even during the additional 15 minutes, see, 4:08 p.m. here, this was the pattern. And if you remember, if you were watching my video that day, or if you watched that video, I said upside, upside, upside. It's just that it happened at the end, and this is one of those where you just have to get in, understanding that it's one of those one of two patterns. One is the downtrend starts here, or you have a pullback or a retest that can go a little higher, so you will go negative on your trade for a little bit, but there's no way this is not going to play out, not on this context. And we understand that the context was already forming a sort of negative daily divergence. So that's the entry right there, and these are the 208 puts quarterlies that expire on the 30th, which is this coming Thursday. On opening, 277% return. If you panic, you can get out there, but understanding what we understand throughout the amazing amount of studies that I've done. See, here's the pre-market on the very next day, which is Friday, June the 24th. There's the opening. Boom! So you're in right there, and you have on these particular options, you know, 277% on opening. Should I exit right here? No. Take a look at the poison 5. Your expectation over here is definitely going to be some sort of bottoming, technically bottoming of the 1 minute. There it is. The price is going to ricochet back. I did a study on that ricochet. That's another type of trade that you can do, you know, and that made, I think, 140% or something like that. But take a look at the poise of where everybody, the hourly, the 15, the 5 minute. There's the context. What's the context say? This is a sort of negative divergence. This is the topping over here is exactly one of those one of two things patterns. One, the trend starts here. The other one is either we make a divergence or just a pullback. This is a pullback on trend. Take a look at how the daily was short. The weekly had already turned. Well, over here the weekly is turning on opening. You know what I can do? Here. This is the 60-minute time lapse. Take a look at how by Friday, June the 17th, the weekly had turned already on this drop on the daily. So the trend had been established, and then you have the buildup of the hourly over here, which is going to give us that pullback. And yeah, the weekly was happy to react to that, to the upside, but it was short-lived as that weekly had already been broken. And now we are forming that daily negative divergence or a downside pressure pattern. Take a look at how we have the continuation there. There's your pattern. And then on opening, the weekly definitely turns crazy because this was a magnificent drop. So if we go back to our 5-minute time lapse, there's your technical bottoming on the 1, and the price is pulling back. And by 10:05, the pullback is huge. But at this particular point, on this type of incredibly strong move, you can sustain the technical bottoming of the 5. And take a look at how the technical bottoming of the 5 happens really with just a little bit of a pullback here. We never retest. Or here, so the 5-minute technically bottoms. And I would be looking at really the 15-minute technically bottoming right around here. Take a look at that 60. Holy smokes! So this thing continues. There's the 15-minute bottoming. So 110, 115. This is 1. The 5-minute had an upside divergence by 1, which is right there. That's your upside divergence on the 1. On the 5. Right? And the 15 is really itching to turn, and there's your actual turn over there. Boom, by 115, and 115 takes you here around the same levels, 241%. So you could have exited over there and give back a little bit of that money. I have talked about this scenario where you identify this and you get out. But in this particular case, the move to the downside is of such magnitude that you cannot turn that hourly without a pattern. So you can, and then you have time over here, right? You can let this thing pull back. Take a look at that 15, pulling back, and then you have a continuation. There's your continuation, and that's going to give you a pattern And at this point, you have a 10-minute positive divergence. See, I was looking at this thing with this type of clarity because it's a 5-minute divergence when it's a little too wide, and it's a 15-minute divergence when it's a little too narrow. So you have to bring in the 10, and the 10 will give you the better looking chart. Take a look at the collapse of the price here. This is the hook of the 15 to the downside. And at this particular point, you have a 1-minute pattern there. This could have been your exit right here, 320 at 323%. Now you have a pattern. However, you have time. You bought the quarterlies that expire not this Friday, but the following. If you were trading on Friday here, I probably wouldn't even venture out this far out. I would have gotten out probably no further than this, right there, around 115, right here. I would have been happy with that if I had been trading the Friday expiration. But over here, we're not trading the Friday expiration, we're trading the quarterlies that expire on June 30th or this coming Thursday. So you let this thing play out, and take a look at this, by 320, we're at 323%, then this thing pulls back. Why? Because it's going to play this pattern out, which is this offside divergence on the 5, the 10-minute that I'm not showing you, and the very narrow 15. And I did say at this point, this thing has to play out. So it plays out, introduces weakness to the hourly end of market on Friday, and so that brings you down here, right? But you're in it still, you let that thing play itself out, and then on Monday, take a look at what happens. You open to a nice drop. And so on Monday, on opening, this is Monday, take a look at the days, I put them over here for a reason. On Monday, you are at 415%. Now, is this the moment to get out? Well, take a look at that 5. I would say you have to wait for the 5-minute. This is the context. Take a look at the daily and weekly and hourly 15. The 15 has an upside pressure pattern, and the 5-minute has not technically bottomed. And take a look at how the price continues to drift downwards. Boom. When the 5-minute turns right there at around 10:30 something, right here, 10:30. This is it, 530%. Why here? Well, because now you have an entrenched pattern on the 15. And now we're going to pull back more importantly. And this is where we can go here. And so the 15-minute pulls back, but take a look at the persistence of the trend on the hourly fuels the continuation and fuels the perfect price retest. And so if we continue the study over here, you still have an hourly that has a hell of a lot of power. So the price drifts lower, and you get to here, which is 576%. And at this point, you see, this is another thing, is you can wait, and that gives you the drifting of the price for the time frame that you're looking at to actually turn. The 15 hasn't turned. Hasn't turned, hasn't turned, hasn't turned, hasn't turned. Boom, it turns by 11:30. What is this? 10:58, and this is right around here. So the previous bottoming over here on the 5 gives you that, this bottoming over here gives you that tippy top over here, and then you wait for the 15 to turn. The price manages to go lower a little bit. That's really the bottom of it. At around 11 for the 576% takes you to 933. And I'm not even talking about how magnificent a return of this magnitude is. I mean, we're talking a 576% return, 5 times your money. You can put it here. I mean, this is SPY. So you have the ticker with most volume in the world. You can drop in here $1 million and make that into 5 million, or you can drop in here $10,000 and make that into. No, you drop $1 million, you make it into 6. You drop $10,000, you make it into 60,000. I mean, take your pick. It's unbelievable. It's unbelievable. And so then there's the turn of the 15. Boom. There it is. We have established a reference point, and this is one of those patterns, the 1-2 pattern. One is the uptrend begins here. This is the reference point from which we're going to trend up and either build a divergence with a retest, or just the trend starts there and the divergence never completes. It's just a pullback on trend. So take a look at this. The trend starts up. We have an upside pressure pattern over here that's going to either fuel the buildup of a divergence, or the trend just changes there. So there it is. Take a look at how that 5 gets long. It means we're still fighting the downtrend. And take a look at how that 1 minute builds up negative pressure here. So we got long on the 5. So the 5, the up cycle is going to end here. So take a look at this. So the 5 minute gets long. The 1 minute negative pressure turns that 5. And here's the buildup of, is this either a pullback or are we going to retest? We'll take a look at that hourly. The hourly is really powerful. So it continues to fuel the price drop. There's that 1 minute negative divergence. So at this point, what I did is I work on the zoom in and out of this thing. Sometimes as of late, I'm starting to leave more of the chart in here so that we can make do with the patterns, even though they get a little too crunched together. So over here, I zoomed out and take a look at the negative divergence or negative pressure. Take a look at the decay on the uptrend, on the up cycle of the 1. So it obviously ends, and the context is pretty good. We already pulled back. Even the 15 is long, right? And so here we are fueling the continuation that will yield a pattern. Now take a look at how on this drop here, we build a poor man's divergence. This is a good term, poor man's divergence. It's a lackluster divergence that never really retested. But over here, the 1 minute down cycle gets tired. We have a 15 that's pointing up, right? So that fuels the upside, and this becomes just, you see, you have to also think about this. We already established a technical topping over here with a divergence. So any type of pullback over here is going to play and fall within a negative type pattern over here, a topping pattern that will tire, the pullback will tire. And now we introduce weakness to the up cycle of the 15, which have a bend and a continuation, which yields a triple top, head and shoulders type pattern here on the 1. And so that's not going to let the price go anywhere. Take a look at how the price just, boom, ricochets off of this technical ceiling. The 5 minute is now throwing grapefruit. Take a look at how the 1 is keeping the price in check on that technical ceiling. We managed to top at the same levels, basically, but the technical picture is eroded, and the up cycle over here is done. So what happens next? Take a look at this. There's your continuation, and this is where it gets interesting, because at this particular point, if you want to trade the upside, you're thinking, man, this is starting to look pretty interesting. But we haven't retested all the way down. The hourly is still pointing down. This is where it's a divergence on the 15. It's a poor man's divergence on the 15. But it's too narrow and it's too wide on the 5. So you want to then bring in a 10. Take a look at the continuation. And over here, when that 5 minute turns, this is the moment where I've been telling you this is it. Now, take a look at this. If we are looking at our other position over here, just gotta allow the picture to be taken. Hang on. Where are we at? We are 225. 225. This is Monday, and I just didn't do markings in here, but this is noon, this is 2, this is 3, 225 is right around here, See, this is the poor man's divergence over here. It's a positive divergence on the actual stock, and it's a negative divergence on the options because we're trading puts. See, at this point, we haven't retested, and then we actually retest almost at the same levels by closer to 3 o'clock. So that takes you, there it is, 3 o'clock, there's the new low, and then the price just explodes from there. Boom. And that brings us to today, and then today, we are over here, now we are undermining the 15. We technically top the 5. This is where it pays to have this over here like that, because you can bring about the pattern that topped out that 5. The 5 minute breaks apart right here. Take a look at the upside. They're still present on the 60 and 15. The 15 is decaying So what we have next, what's next now? We have a negative divergence on the 5. We have a 15 that's definitely long. We have a 1 hour or a 60-minute and hourly chart that's really poised to the upside. We have a daily that is really entrenched on the downside. Remember I said earlier about the channel regression? And how I don't think we can go any further than this. I'm a little concerned about the poise on this 60. There's definitely a pattern in here that is undermining the continuity of that 15. It makes me want to take a look at the 2 and 4. The 2 hour is very short on the upside. The 4 is still pointing down, and so is the daily. This thing says continuation. That's what it says. And take a look at how the price starts to develop lower. I don't know, the 201 puts the quarterlies. Here's the 201 puts, quarterlies. They are $1.07. Lots of interest. What's the deal here? Can this thing play out? I want to see something. Here's a look at a 15 here. It's long. The 30-minute is long. Here's a look at a 5-minute. Lackluster divergence, really. 10-minute. This thing spells upside for me. Yeah. I want to see the 1 and 5 here. What do I see here? A lackluster pattern. And take a look at how this thing is just starting to take off. No, I'm not going to do anything. Don't like it. We're going to wait it out. So, let's see. So here's 2 o'clock, and see how this thing just doesn't move. It moved a little bit. Here's the options. Hardly anything, not a significant enough move. And then if we go and take a look at the 5-minute time lapse, here's 155. Put your eyeball on the hourly there. Take a look. Okay. And take a look at the 2 hour. The 2 hour is still pulling back. So at this point, I need to see an entry on, I need now like a 15-minute zigzagging or a pattern, something. I don't like what I see here. Take a look at the direction of the 60 on VXX. And this thing really was a downside pressure pattern. And again, if you take a look at this, this is a divergence. And if you bring in the 2 hour, it becomes more cohesive, and then the 4 hour came over. 234, there's the price exploding to the upside. Nice little retest here on the 1. We're looking at these options. The possible entry right here at 1243, 1242, right around here on this pattern we saw. And you move from 92 to $1.15 for a 25% return. But no sustainability, and there's the price upside. It's interesting. 241 and 1 minute wants to technically top. We have a little bit of a pattern here, but too small to matter. Qs, too small to matter. Russell, too small. Diamonds, too small. VXX looks interesting, but take a look at the direction on that hourly. If I call the 2 and 4, I don't know. We have direction. This thing is short on the drop. This thing starts to look like an upside divergence there. Or meant upside divergence. I don't see an entry for anything yet. You could say, let's take a look at the 10-minute. Too shallow. And if I show you that 10-minute on this context, take a look. Too flat. Here's a 5, here's a 10. Context not good. And then this hourly like this, forget it. We're in the middle of a pretty significant pullback, but we need some meat over here to turn this 60. Now with that said, take a look at that 15. Is that long or what? The hourly is a little long. The daily is calling the price down. More upside at 251. Take a look at that. And now we're creating some resistance there on the 1, but the direction of the 5 is very poised. 255, take a look at the continuation from 201.50 to 202.50. See, that knowledge and understanding of what happens next is also another means of trading. See, this pattern over here was pretty strong. Wow. And take a look at the decay on these options. Now, if a position had been taken on the 202 calls, this is the moment of this pattern on the 1 minute chart. This is the beginning of the trend, and this is a pullback on trend. You can see it reflected in here. From 104 to 182 for a 75% return. This thing did reach over here, and when I was doing the markings, the plot changed over here. But if I show you bars, see how it reached there? It's just that. Right now we're having a regression. This is a downside pressure pattern. This thing has now more meat. And I left this thing on the 10 minute. What an idiot. So gone. The problem is that affects my time lapse. See, I took 2 at 10 minutes. Anyway, well, take a look at this. This is 255, and then I want to show you the transition. Take a look at the 60. Put your eyeball there on the 60. See the momentum? And obviously, we changed from the 15 to from the 10 to the 15 here. We can go to 245. That's where the 15 was at 27, and now from 27 to 36. We're having a regression right now. 317, and we have a more entrenched 1 minute chart. Take a look at how this thing topped out higher. You know, it's interesting, but a bar type chart is definitely welcome. However, I just don't like how we're missing so many plot points. That's why I tend to use lines instead of bars. But you can see that the price did indeed, for a brief period of time, touch 182. And now we're at 186. Well, we were at 186, and we are receding back as this 1 minute is applying negative pressure on the up cycle of the 5. Now, has the 5 turned? Not yet. Let's see what happens here at 320. Okay, so here it is. Let's take a look at the 5. It didn't turn. It just flattened. See what I mean? And that 1 minute is already long. We pass another 5 minute interval at 325, and the 5 is turning on its own pattern. And here makes me want to take a look at the 10. It's still a smallish pattern. Maybe you can make it to 202, but you already moved the price 50 cents. Take a look at that. The poise on the 60 is pretty strong. Here's what the 2-hour and 4-hour charts look like. This definitely says that we're going to have a continuation. I just don't see a healthy enough pattern to take on this very poised 60. 330, see low sustainability on the drop, long on the 1, short on the 5, lackluster pattern on the 15, poised 60. Not a good context for a sustainable drop. I knew that it could move the price, but not enough to warrant an entry. 335, the 5 minute dips a little more. We got a regression, that forms a pattern. But I still say it doesn't sustain. Take a look at that 15% really turn. 340, price going back up. We're forming a pattern here on the 1. Definitely doing a number on this 5 minute. Take a look at that 60. I just cannot bring myself to go against that 60. with a lackluster pattern here on the 15. I just can't. 345. Topping out over here. Lackluster 15, 5. 15's a little weak. Hourly is really, really poised. And take a look at that 2 hour. $3.50. Price continues to move higher. Take a look at that 15. Not good. $3.55. The price reluctant to drop. In fact, it's going back up. This is it. 4 o'clock. Take a look at the upside. That's it. The end of the trading day. Here's a look at the 60-minute time lapse from 3 to 4. Take a look at the poise of that 60. And do we have a pattern to speak of on the 15 to really turn that around? Not really. Not really. Qs? Not really. Russell? Not really. Diamonds? Not really. VXX? Not really. The poise on this 60 is magnificent. So no go on that. There's probably going to be more upside coming in tomorrow. So I'm gonna leave it here. It was an interesting video. There's not very much else to add. Take a look at this in the additional 15 minutes. These options continue to go up. So I leave you with this. We're just hunting for a good looking pattern on the 15th so that we can catch the continuation. So tomorrow will be already Wednesday, June the 29th. Until then.